You're welcome back to the program. If you've just joined us, you're watching Business Incorporated. We're coming to you live from Channels Television. And Eurozone ministers met to review Greece's reforms progress and, of course, expected to agree on the disbursement of the remaining 2.8 billion euros of the 10.3 billion granted under the first review of the aid program.
Eurozone ministers met in Luxembourg on Monday to review the progress of Greece's reforms program and are expected to agree on the disbursement of the remaining 2.8 billion euros of the 10.3 billion granted under the first review of the program. The European Commission gave Greece a positive review of its reforms, paving the way for the disbursement by the Eurozone of the loan. Germany, which habitually takes a hard line, remained sceptical, suggesting that not all required reforms were carried out. To get the money, Greece was supposed to take 15 reform actions called milestones, the last of which were completed over the weekend. The institutions assessing the reforms are the European Commission, the European Central Bank, the Eurozone Bailout Fund (ESM), and the International Monetary Fund. But EU officials said that some countries, especially Germany, argued Greece still needed some more work to complete the milestones, mostly regarding making the privatization fund fully operational. This could delay a decision on the full disbursement of the 2.8 billion euro tranche, the last of the so-called first review of Greece's aid program. Apart from paying out the money, much of which will go to pay Greek government arrears, the completion of the 15 reforms means that Greece will be able to start the next stage of the reform process, called the second review, which is a condition for a start of talks on the scope of Greek debt relief. If Athens completes all the actions from the second reform review by the end of the year, it could begin negotiations on the terms of medium to long-term debt relief from the Eurozone, an important political victory for the government. Eurozone ministers, who are now the main creditors of Greece after the country restructured privately owned debt in 2012, agreed in May that the guiding principle for debt relief once all reforms are delivered would be cap Greece's gross financing needs at 15% of GDP in the medium term and at 20% in the long run.
U.S. stocks opened sharply higher due to a rebound in crude. Earnings season kicks off this week with our core and the big banks. For the details, Jill Malandrino joins us from the Nasdaq market site in New York City.
U.S. stocks opened really strong across the board. We're just up about 1% on all three of the major averages. As a reminder, today the bond market and banks are closed in observance of the Columbus Day holiday. Now, we are getting a lot of momentum from the crude market as it's up about 1%, approaching one-year highs as traders raised bets that oil prices would gain on the back of a landmark agreement among OPEC producers to rein in record output levels. Bloomberg is also reporting that Russian President Vladimir Putin said at the World Energy Congress in Istanbul that his country is ready to freeze or even cut output with OPEC. The other big story is in the currency markets. The Mexican peso rose as investors saw less chance of a Republican nominee, Donald Trump, winning next month's presidential election, while sterling was under pressure after Friday's flash crash in the British currency. Let's take a look at the trading week ahead. It's the unofficial start of earnings season as it kicks off on Tuesday with Alcoa before the market opens. The only other major reports this week will come from CSX Delta, Wynn Resorts, and several banks, including Citigroup, JP Morgan, PNC, and Wells Fargo. The real heart of earnings season is the week of October 25th. Now, according to analysts at S&P Global Market Intelligence, earnings are projected to decline 1% year over year for the fifth quarterly decline in a row. 7 of 11 S&P sectors are expected to post positive earnings growth for Q3, with materials, financials, utilities, and consumer staples leading, while telecommunications, industrials, and real estate may show a decline. The energy sector is again projecting the largest decline in growth, though the decline continues to improve sequentially. On Wednesday, the FOMC minutes from the September meeting will be released at 2 o'clock Eastern. While investors not expect a change in the minutes from the last FOMC meeting, The release could move the markets as traders pick apart each word, looking for clues to monetary policy. 3 Federal Reserve Bank presidents will also be on the speaking circuit, including Chair Janet Yellen at the Boston Fed conference on Friday. From the NASDAQ market site in New York City, I'm Jill Malandrino for Channels TV.
Thanks, Jill. Let's cross over now to the Nigerian interbank foreign exchange market for currency trading today. Ayodeji Oyini is a forex dealer with Rand Merchant Bank and joins me on the program. Ayodeji, thank you so much for your time.
Thank you for having me.
Now, what is the trading value of the naira against the dollar and, of course, other currencies?
Okay, the market is currently trading at 315.50, and on the day turnover has just been a little bit under $5 million, with a range of 310 to 315 on the day.
So, how has the demand for forex by end users been?
I would say liquidity is still very thin. We've had more like pent-up demand, even though in terms of supply, we're still limited supply. So really, on what we have outstanding is more of demand. So more demand outstanding and limited supply at this point in time.
So what is the sentiment like regarding the disparity between the parallel market and the interbank FX rate? Are we seeing any form of closure in any way?
We've seen the parallel markets, appreciate marginally, but we've not really, the gap is still so wide. So we're looking at like 475 to 315 in terms of comparison. But in terms of liquidity, what we're seeing come on, the turnover in the cash market is very minimal. And also to note that this is just the cash market, so it's not really a reference point. It's just what people are using at this point in time, but there's not much liquidity in that space.
All right, thank you so much, Ayodeji Oyini, a forex dealer with Rand Merchant Bank. In Ivory Coast, consumer price inflation has seen that rising 0.7% year-on-year in September, compared with deflation of 0.4% in August. That is according to the data from the National Statistics Institute, which was released today. The monthly report showed that food and soft drink prices rose 2% year-on-year. Housing and utility prices added 1.3%, but transport costs fell 1.4%. Ivory Coast's economy accounts for around 40% of the 8-nation West African CFA franc currency zone. With that, we've come to the end of Business Incorporated. Thank you so much for being a part of the program. Hope to see you same time tomorrow. I am Bolaji Akiwale. Bye for now.